Well, Stefanutti's first half headline earnings per share fell 62% to 27 cents. Revenue increased by 28% to 4.9 billion rand. And joining us for more insight into the numbers now is Willie Myburgh. He's CEO of Stefanutti. Thanks so much, Willie, for joining us this afternoon. Well, a decline in profitability coming through there. And, speaking to the traders at the desk this morning, they were saying no big surprises because we know that the construction industry is one that's come under pressure, but quite a lot of challenges that presented itself to you in this reporting period. Run us through them, because specifically being highlighted is loss-making contracts.
Yeah, we're very disappointed in the results that we put to the market as a result mainly of the loss-making projects that we've incurred in our building division, and predominantly in Mozambique and in our inland division in Gauteng. And I think the main reason for that was that because of market conditions, we have probably taken on too many projects at low margins, and they turned into problem projects. And we decided to take the losses on those projects to book in the first half of the year. And we are in a process of trying to see how much of those losses we can recover. Now, if those are the losses, we recover them, it will be recognized in the second part or later in the year. But I think what's quite important is that we have implemented corrective actions on the particular projects where we've had problems, and also in some of the management structures. And it's only two of the projects that still we need to work through, and they will be completed by the financial year end, and that's the important thing for us.
Willie, I don't want to apportion blame or harp on the loss-making projects too much, but maybe you could just give us a brief anatomy of what actually happens. You sign a contract for a particular project. What happens? Is there strikes? Do costs rise? Unforeseen costs rise? In the Mozambique case, is it a currency factor? Is it poor management? What actually is the cause of this, or is it simply, just wafer-thin margins?
I think it's the latter. It's the way to thin margins. And when we execute the projects, partly it was as a result of poor execution from our side, and also because of contract delays in late information and disruptions. And the combination of that caused the projects to be delayed. And that is the main reason for the losses.
Where you're in this recovery process right now, how do you mitigate against this kind of risk moving forward?
Well, certainly one of the things that we definitely not doing at the moment is that we are not looking at low margin projects anymore. What we found in the past, that there are clients coming to the market with very onerous contractual and conditions that we have to meet, and we're not prepared to price at those prices anymore. We rather shrink the business, especially in building. And we believe it's still a very good business. The fundamentals of the business is still good. We put the right measures in place, looking at the business itself in terms of cash generation. It improved. Our cash is up. The operations are generating good cash. So yes, I think it's just a bit of a bad spot we went through, and we're busy to get ourselves out of that, and we believe for the second half of the year the results in building will be better, and that will be in the black.
Willie, Alishia will back me up on this. We have recently had Dr. Kees Broekemans talking to us in the Power Lunch studio about the building confidence index, and it's in an upswing, but on the other hand I keep on seeing sets of results and trading updates which don't suggest that is being taken advantage of, and I just wonder what your opinion was on that.
We believe over the medium term there are opportunities where we can see that there will be an upswing from sort of medium to long term in retail and in warehouses and in commercial buildings. But over the next 6 to 8 to 12 months, we believe that the building construction market per se, will still be under pressure, and we will still have a competitive markets in that area.
So within that competitive arena then, where you're saying no to lower margin businesses, how are you rating your competitive muscle then? Because surely that saying no is going to bring with it a decline in business.
We're not saying no to all projects. Okay,
low margin business.
Yeah, at low margin business. We're not saying no to all. There are still businesses work out there that we can obtain at reasonable margins, which we have done recently. And we believe by the way we've secured it and the areas we've secured it and the management that we have in place to take it forward, we can make sure that those projects are profitable.
Yeah. Your approach to projects on the rest of the continent, what kind of Africa strategy do you have in place?
We've got a strategy where we've been in Africa and SADC regions for many, many years. I think we're one of the few contractors that do have permanent offices in the SADC countries. The fact that we've made some losses in Mozambique doesn't mean that we don't want to work in Mozambique, because Mozambique, over the next number of years, if the proposed all the gas developments will happen, that will bring great opportunities, and we would like to be there.